Ghana's monetary policy rate at 27% is currently the highest in Africa, and that's according to the World Bank's October 2024 Africa polls report. Let's not forget that Nigeria's MPR is currently 27.25%. The Bank of Ghana, along with other central banks of the region, has maintained high interest rates to manage inflation expectations and guide the economy toward their inflation targets. While some countries in Africa may soon start lowering rates amid stabilizing inflation and currencies, Ghana's economic challenges persist, with currency depreciation and cost pressures influencing a cautious approach. The recent 200 basis point rate cut marks the second since 2021, but experts suggest that further deductions or reductions may be delayed due to the need to anchor inflation expectations and stabilize the economy. Derick Xatse, economist and financial analyst, joins me for more on this. Hi, Derick. Good morning. Good to have you join me today. Derick, I see. Okay. I see you're muted. Can you try to unmute so I can hear you?
Okay.
Great. Thank
Greetings.
you. Thank you for joining me today.
And thanks for the opportunity. Greetings once again.
Yeah, sure. Now, although the World Bank has said Ghana has the highest monetary policy rate at 27%, we know Nigeria is 27.25%. So how then is Ghana the highest? Is that based on real return on investment, or what's that about?
Thanks for the opportunity. Basically, he's just citing that Ghana is one of the highest when it comes to Africa. Definitely, we cannot compete with Nigeria for this. This is not a good competition to go by, but it's a worse indicator when it comes to macroeconomic indicators, and then it doesn't augur well for an economy of Ghana that is just developing and then now recovering from the shocks of COVID. Not only COVID, but some sort of economic mishaps that we've experienced over the past few years. And so definitely not a good thing to go by. But we're just hoping that moving forward, as the target is to lower inflation, we will be able to achieve our set target of lowering inflation by December.
Well, we understand that central banks have kept interest rates higher to anchor inflation expectations properly and also secure a smoother path, to their inflation target. Do you think Ghana is making progress with its inflation targeting?
Yes, and so in terms of inflation targeting, Ghana is making progress because when you look at around 54.1%, and that was very high if you consider the sub-region. Very, very high to have inflation rate of 54% and above. But slow, increasing the monetary policy rate to 29.5%, we've come as low as almost 20.1% in recent terms. We saw a decline in it from May, June, July. It was reducing. We were around 22%. 23% by May. It came down to 22%. In June, we came down to July 20%, and then in August it was 20.4%. Surprisingly, we couldn't maintain or reduce the rate for September. September went high to 21.5%, and we hope that the new reduction that has come to 27% of MPR will be able to reflect and help us to achieve our set target when it comes to inflation.
What do you think happened, though? I mean, for 5 consecutive months, we had inflation, going down, tapering. But then September, it sort of bucked the trend. What happened?
And so Ghana's inflation is not only anchored or caused by the monetary policy instruments, or cannot be fight with only monetary policy instruments. We have other things that reflect in the rising cost of productions, or let me say input cost that goes high because of our import dependency. We continue to import things from outside, and then of recent time we've seen that the currency have depreciated worse of its kind, and it makes the cost of importation very high. And producers definitely will also pass on those costs to consumers, and that reflects in the higher price. If you cannot control the exchange rates, then definitely you have issue with it. Another factor got to do with the energy prices. We've had fuel prices increasing over the past period. One of the causes of the fuel price is also because of the exchange rate depreciations. We've not been able to stabilize it. In terms of the taxes in the price build-up for fuel, we've been able to maintain that for a period of time. For the fluctuations on the international market, Ghana basically do not have any control over it. And so energy prices or energy price fluctuations also accounted for the inflation cost. We are talking about the import dependencies and other things, agricultural prices of goods and price of agricultural products have not been stabilized because of the seasonability, and then the continuous dependence on the weather, the natural rainfall, instead instead of having other alternatives when it comes to irrigations. We are not taking or we are not making full utilization of our irrigation facilities. And so agricultural price of agricultural products have not been stabilized, and that is a cause for worry, and many other factors. And so these ones cannot be addressed with monetary policy instruments.
Absolutely. Now, we're also seeing the continued depreciation of Ghana's currency, while demand for foreign exchange remains pressing. Talk to us. What's your outlook, and what do you make of some of the measures being taken by government to sort of address this? Is it working, or are they working?
And so for the past period, we've seen a bit stabilized decline for it. If I say stabilized decline, I mean that it's still declining, or we are still experiencing the currency depreciation, but the rate of it is quite low, and that is a good news because it helps businesses to be able to plan their investments. And now ending the year, it helps them to focus better for the 2025 year. Now the second factor got to do with that we are also under the IMF program, and so when it comes to government expenditure, those things have been streamlined, and so now expenditure is now towards an investment that can bring the needed returns, not based on consumption. And so we just hope that we'll be able to continue this in spite of the election year cycle that we find ourselves, where government is tempted to be able to spend more and to be able to more either for vote buying or for whatever thing, or spend more on consumption to be able to get a vote. We hope that the government will not go overboard and be able to ensure some sort of the government will be able to ensure some sort of a policy adjustment, and then its expenditure cuts.
Derick, I'm afraid we need to go on a very short break. When we come back, you take it up from there. Thank you so much. Glad to stay with us. Derick Xatse, thank you for staying with me.
Once again.
Right. So before we went to that time out, you were talking about, the city, yes, effort to, make it appreciate.
And so I was talking about expenditure cut or expenditure controlled in under the IMF program. We are under the IMF, and so we do not have that flexibility to be able to spend on things that do not bring the needed economic benefit. And so now expenditure is now geared towards things or investment that will be able to repay on its own. Now we just hope that going forward in light of the election cycle, the government of the day will not be tempted to be able to spend more, and then that will also increase our fiscal deficit and co. And so we just hope that going forward, expenditure can be controlled and will not be tempted by the election cycle fever.
Well, the Bank of Ghana cut its benchmark policy rate by 200 basis points. I just want us to come back to this, to 27% in September 2024. That's the second rate cut since 2021. Now, saying that inflation rose again after 5 consecutive months of decline, would you say the bank acted too fast? That's one. And then another one, in August 2024, we know that the UK-based Fitch Solutions projected that the Bank of Ghana would cut its policy rate by 200 basis points before the end of the year. And of course, we can see that, the Bank of Ghana has already done that. Do you think it's borrowed a leaf from what, the UK-based Fitch Solutions said?
For MPR, that is a monetary policy rate, to be reduced, that is a good thing for all investors, because they are expecting that with that reduction, then the banks will be able to have a lower interest rate, and then people can easily go to the banks and be able to borrow. That will also stimulate consumers' expenditure and a whole lot of other things. And so the good news is that the monetary policy rate has been reduced. That is a good thing. Hoping that we can maintain that going forward is the next thing. Now, the monetary policy rate is not done on monthly basis, and so it's done on quarterly basis. And when you take the inflation rate, this happens on monthly basis. And so for the month of May, it was around 23%. It came down to 20 as at almost August. For September, we were not able to maintain the continuous decline. It went up to 21.5, which is not a good thing. We are waiting to see what happens in October. But as I stated, the cost of inflation is not just things that can be fought with monetary policy. It rises from import dependency, because cost of importation keeps rising because of the currency depreciation. We have energy factor cost, which is fuel prices. Fuel price continues to increase over the last pricing window, which is the second pricing window for October. We've seen fuel price increases at the various pumps, and so these all cumulatively account for the continuous interest inflation rate increase. And so we just hope that going forward we will to maintain it, and then along the line also with a controlled government expenditure.
Right. So what metrics do you think the central bank will be monitoring, to make its next rate decision? If I can have that in
And so
30 seconds.
pardon me.
I was saying that what do you think, what metrics do you think the central bank will be monitoring, to make its next rate decision?
And so the central bank basically will also be looking at the price and agricultural price of goods and services. It will be looking at the imports, importation outlook, how much of things we are importing. Government has brought a policy where some of the things are not imported. They expect us to even not export agricultural products as it stands now because of food insecurity issues. And so agricultural products remain in the country so that we'll be able to check prices of those things. We are talking about fuel price. We just hope that going forward, fuel prices will not increase beyond a certain margin of 15 Ghana cedis. We'll be able to maintain it around 13 to 14 Ghana cedis. Then the central bank will be more motivated to either maintain the policy rate or even reduce it further to stimulate economic growth.
Right. So talk to us about fiscal consolidation and how this can contribute to improved economic performance in Ghana, not just Ghana now, and even other African countries that are facing similar challenges.
And so one other thing is the controlled expenditure. We continue to record a higher fiscal deficit, which is not good for it, because how will you be able to spend triple or double your taxes or your revenue? That is not a good thing. And this consumption or these expenditures are also not targeted towards investment or into manufacturing or industry. It is always targeted towards consumption goods. And so those consumption goods definitely do not repay back on its own. That becomes a cost to government and does not stimulate economic growth. Those expenditures into consumption is what also drives the inflation rate. And so as I continue to say, we are in an election year. And we just hope that the government will not pump a lot of money into the economy. The government will not print more currency. They will do zero financing from central bank for this election period. And we'll be able to maintain the stability of the city. Other than that, then they'll print more money, pump it into the economy. Consumers will have more money. And those more money will chase fewer goods, which is not related to production. And then inflation will continue to rise, which is not a good thing for the economy.
Absolutely. Now, let's close on this. How important is it for African nations to sort of align their monetary policies with global economic trends, so they can sort of foster resilience against external shocks?
Quite a good thing, and then that will also inure to the benefit of all Africans. But Africa has a peculiar challenge, and because we have those that are under the France zone, we're talking about Benin, Burkina Faso, Cote d'Ivoire, Guinea-Bissau, Mali, we're talking about Niger, Senegal. These are all having controlled inflation that is determined by the West African Economic and then monetary union. And so if you check them, you see that they have a stable inflation rate, which is around 3%. But take those in the other West African countries like Ghana, Nigeria, Sierra Leone, we are talking about Gambia, they are all recording double-digit inflation. And so if you're able to peg it to international standards, that would be a good thing. And then it will help businesses to be able to plan their things. It will also equally attract a foreign direct investment because they are sure of the stable macroeconomic indicators.
Derick Xatse, economist and financial analyst actually. Thank you so much for your time and your thoughts on Business Edge today.
Thanks for the opportunity, always available.
Absolutely. Thank you.